welcome back to the channel. Thank you for tuning in. So, in this video, I will be showing you how to trade the ICT London Killzone. So, I invite you to basically, I will be looking at the live market for this video. Hence, I say I invite you to my, live market session for this video. Okay, guys. I don't really have any specific set of rules with regards to trading the London kill zone, because the London kill zone is actually like, it's just a few hours in price, 2 a.m. to 5 a.m. That's the London kill zone. So you're basically just looking for smart money footprint in between these times. So you're looking at what the algorithm does in between this time, 2 a.m. and 5 a.m. New York time. So all the times that I refer to will always be in New York time. I'll quickly show you how to set your times to New York. Okay, so let me just quickly show you how to set your time zone to New York Standard Time on your trading view. So you go to the lower right corner of your screen, it says time zone right there. You click on it and then you change from whatever time zone you are to New York. So it doesn't matter even if you are like me, trading from South Africa or anywhere in the world or anywhere in Africa. You must use New York local time if you want to take advantage of smart money concepts. Okay, so EURUSD. Before I begin, let me just quickly look at DXY on the daily so that we may have an idea of where EURUSD is gonna go. If DXY is going up, EURUSD is gonna go down. So they have an inverse relationship. So this is DXY futures contracts. Let me see if I have. Okay, so this is the dollar index futures contract. On the daily, you can see price has been pushing up. We're coming from this fair value gap here. We're coming from this fair value gap. It's a daily discount fair value gap. Price is trading towards this volume imbalance here. It's a gap in price. So as you can see, we entered the volume imbalance. We got a reaction on the consequent encouragement of the volume imbalance. So let me quickly remove this so I don't confuse you. So we tested the consequent encouragement. We traded to the consequent encouragement of this volume imbalance. In other words, we traded to the midpoint of this gap. So as you can see, price having a reaction, and now it's testing this volume imbalance once again. And then we are potentially trading to buy side liquidity above this high here. Buy side liquidity above this high formed on the 8th of March. So what we're getting from this is that the dollar is pushing higher. So the dollar is rallying higher, it's going up, it's strong. Meaning if the dollar is strong, foreign currency, euro, pound, everything else is gonna go lower because they have an inverse relationship. It's a risk on, risk off scenario. Basically meaning they have an inverse relationship. So with the thinking that dollar is going higher, we expect euro to go lower. Therefore, we expect euro USD, the pair that you all know, to go lower. Ne? So I'm gonna go ahead and open my euro USD chart. So I'm on the normal chart, as you can see. It's not the future. It's not the futures contract. It's the normal euro USD chart that you can find on TradingView. So again, I'm on the daily chart. Euro, we can see euro USD is also going down to confirm what we saw on DXY. We saw DXY go up. It was trading from basically euro USD should be exact opposite of DXY chart. All things constant, it should be like that. So we see this premium fair value gap in this case. Market traded to it there. Now it's rallying. It's going down. It's declining. Where is it going? We had a volume imbalance on the DXY chart. On this chart, we don't have volume imbalance. We have this equal lows here. These are equal, especially with the bodies there. So if you ignore the wicks, the wicks do the damage. So you can see, as you can see, price was using the wicks to take out sell side liquidity. It used the wick here to take out this double bottom. So the wicks do the damage. The bodies tell the narrative. So the bodies, that's where the liquidity is at. So the bodies tell you that these are relatively equal lows. Relatively equal lows. In other words, this is sell side liquidity. So relatively equal lows, I'm going to use this emoji to emphasize my point about the relatively equal lows. Yesterday I told you that you should always trade against relatively equal lows. Not only should you trade against relatively equal lows, but you should also know that relatively equal lows are a magnet in price. In other words, they attract price. In other words, price will always trade to equal lows or equal highs. Ne? So as you can see, I'm using the emoji there to emphasize my point. So Euro USD is bearish. We have a bearish bias. So as you can see, I just showed you how to get your daily bias. So if you don't know daily bias, this is very important when you're trading other models, other smart money concept models. The daily bias is very important. So what is the daily bias? The daily bias is basically where is price most likely to go for the day. So you need to identify, before you even start your trading, you need to identify where is price most likely going for the day. If you're trading the silver bullet model that I've been making videos on the YouTube channel, you don't necessarily need to know where price is going for the day, because there you just open your 1 minute, 10 a.m. to 11 a.m. That's what I told you so far. And then you look for the fair value gap. But when you are trading, for example, the London Killzone, you need to know things like daily bias. So Euro USD, we can see that it's been working nicely off its fair value gaps. Like I mentioned, I am long-term bearish on Euro USD, at least up until you take out these lows. That can happen, I don't know, but like around December. So I've been selling Euro USD since September. So from this month, the whole of September, I've been looking for sales on EURUSD. We were targeting this low, we were targeting this rejection block, we were targeting this low as well. We are targeting this relatively quite lows. So spend money is bearish on EURUSD for the month of September, probably October as well, and maybe November. Who knows, December too. So we'll see what price has in store for us. So going to my 4-hour chart, I think I have to label my PD arrays so that I don't get lost in price, and you can also follow along as well. So this is a daily premium fair value gap. I'm gonna try my best to be very fast so that we do not have a very long video. So this is my daily premium fair value gap. Let me make it a bit light. I'm on the 4-hour chart. We have another fair value gap here. As you can see, price created to it using the wicks. Like I said, the wicks do the damage, the bodies tell the story. So the wicks are the ones that are price. In this case, it used the wicks. It used the wicks to trade to the fair value gap, to the 4-hour premium fair value gap, and then the bodies stayed below the fair value gap to indicate that price is very bearish. So price, the bodies are telling us that price is in a sell program. I'm looking for the paint feature so that I may draw your attention to some. Okay, so I was talking about this. Price is using the wicks to enter this fair value gap, and then the bodies are staying below the fair value gap to indicate that price is in a sell program. So this is our 4-hour. Let me color code this red to symbolize that price will find some. This is a premium PD array, so it means price will enter a sell program as soon as it enters this area here. Okay, guys. So what I'm gonna do is I'm gonna go ahead and go on the lower time frames. I'm gonna go ahead and go on the lower time frames, and then because again this is a London Killzone video, how to trade the London Killzone. So I'm gonna immediately try to cover the London Killzone and not go into much and end up confusing you. Okay, so I just marked our okay, I'm not trying to confuse you, but this is an IPTA, new true day. What does this mean? The IPTA okay, I forgot what the I stands for, but I think it's the no. The IPTA is basically the name of the algorithm that moves price. Now, if you're new to this concept, what I just said right now sounds it sounds like it's from a movie. But I think this is the International Price Delivery Algorithm. So I don't know what the I stands for, I forgot, to be honest. But the PDA stands for Price Delivery Algorithm. So the algorithm that moves price, in other words, the price engines that move price, we call that IPTA. That's the name, that's the actual name for the algorithm that moves price. The algorithm that moves price is the exact same algorithm that moves all the prices in anything from Forex, cryptocurrencies, Nasdaq, blah, 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 blah. They all have the same name, IPTA, New True Day. So what that means is that at 12 o'clock, New York time, 12 o'clock, New York time, the algorithm will start a new day. Now, obviously, if you're not aware of this, you're just gonna, you don't even know, in retail, you don't even know when the algorithm starts its new day. Or if you try to use MT4 uh, candles or even a trading view daily candles, the opening price there is incorrect. The new day is actually at 12 a.m. every day. That's when the algorithm starts a new day, and then it ends at like different times for different pairs, obviously. But for Euro, it starts at 12 o'clock and ends at 3 p.m. But it doesn't matter what time it ends, to be honest. So for tonight, we're going to mark. Why is this not marked? It should be marked IPTA New True Day. The reason I put true is because I'm trying to emphasize. I'm trying to emphasize that that's the actual new true day. It's like the real opening price for the day. So that's the opening price that smart money uses. All smart money traders, they know the opening price is at 12 a.m. Then I'm gonna mark our second significant hour, which is the 2 a.m. So this is the London Killzone. Remember what I said at the start of the video? The London Killzone, 2 a.m. to 5 a.m. So London Killzone, I'm gonna mark it using the 2 a.m. hour and the 5 a.m. So in this 3-hour period of time, you're looking for IPTA, the algorithm, to give you an idea of what it's gonna do. Basically looking for a setup to form in between 2 a.m. and 5 a.m. Guys, the London Killzone, what makes it so special is because if we are bearish, the high of the day, so if we are bearish for the day, the high of the day will most likely be formed in the London Killzone. If we are bullish for the day, the low of the day will most likely be formed in the London Killzone. Now, if you are new to this concept, what I just said right now is going to go through your head so bad. But this is one of those things that they fast-paced my journey into smart money concepts, because as soon as I hear ICT mention such gold, literal gold, I'll write them down in my notes. So if we're bearish and we checked our daily chart, we saw that price is in a sell program on the daily. So our daily bias is bearish. We anticipate. It's not always going to happen. Sometimes the low of the day can even roll over to New York session. But most of the time, we anticipate. In other words, we expect, we predict the high of the day being formed in the London Killzone. Where is the London Killzone? Here's it right here, 2 a.m. and 5 a.m. So if we're bearish, we expect the high of the day to be formed anywhere in between 2 a.m. and 5 a.m. Yeah. Okay, so let me just quickly cater for this fair value gap that we head in price, this all fair value gap. We can see price is leaving this fair value gap. We can see price is leaving this fair value gap. I'm trying to keep this as basic as I can, but I'm also sharing some of the I guess secrets that if you watch ICT for yourself, you probably take a long time to figure them out. But because you're learning smart money concepts through me, you will find it a lot easier and faster to learn them. Because I'm just like pouring my heart out from the first second of the video until the last. And I'm gonna keep my videos a little bit short. So the time is currently 2:43. I'm on the 5 minutes. I'm on the 5 minute. Let me go ahead and go on the 1 minute. So on the 1 minute, immediately I can say my eye jumps right to this relatively quite lows. In other words, sell side liquidity. We know, I told you those are a magnet in price. I told you those are a magnet in price. So we know price is gonna trade up there. Okay, guys, with regards to daily bias, just because I have a bearish daily bias does not mean that I'm going to go inside my chart and immediately start looking for sales. No. It does not mean the market will not enter buy programs just because we have a bearish daily bias, especially intraday. A bearish daily bias simply means that for the daily on the daily chart, from 4 hour going up, the market is most likely gonna print red candles, especially on the daily. So we know today's daily candle will most likely close red. But that does not mean that intraday, on the 1 minute especially, 3 minutes, 5 minutes, 15 minutes, 1 hour, that does not mean we will not have, green bullish candles. So intraday, the market will obviously go up and down. Ne? But with the benefit of smart money concepts, ICT concepts, we know or we can anticipate when the market is gonna actually go down, bearish. Ne? So just make sure you understand that. Just because we have a daily bearish bias does not mean that we expect price to just print red candles the whole day from 12 until 3 p.m. Does not mean that we expect only red candles. No, it just means that for the day we have a bearish daily bias. So guys, I'm just gonna pause the video for now. I'm gonna pause the video for now because, to be honest, I'm not interested in any buy setups. We are in a bearish sell program. Basically, I'm gonna ignore all buying opportunities. Here's the buying opportunity here. We see price trading to this fair value gap. There's another fair value gap here. Price is most likely gonna trade to it as well. Price can come and kiss goodbye this old fair value gap, but we're not interested in any of that. We are only looking for selling opportunities. And the nice thing about trading the London Killzone is that if you open a trade in the London Killzone, let's say for example your daily your daily bias is bearish and you open a sell during the London kill zone, you can be confident holding that throughout most of the day, up until London close at least, you know, because we know that your probabilities on your side that uh, 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 you have probabilities on your side. Look at this favorite gap being traded too. But again, I said you're not interested. So I'm gonna pause the video, guys, and come back when the market is ready to enter a sell program. Hopefully during the London kill zone.